Good afternoon. This is the Elliott Wave Weekly Update for the Dow Jones Industrial and the Russell 2000, being recorded on Saturday, March the 22nd at 2 p.m. Pacific Daylight Time. I am starting here on the Dow cash market, and as you can already see, this is the largest chart that I actually have all the data for. And it goes back to, I believe, 1902 or 03. 1902. March of 1902 is where my data begins. And actually, that's all that can fit on this particular chart. So what that does for me is that following how Elliott initially was counting the Dow, which was the market that he chose to actually write about and include for his the book, The Elliott Wave Principle, and or his writings, and where he went over his theory and how it was constructed and what he did. Now, remember that back in the day, that when he was doing all this work, he just checked the ticker tape, and literally the ticker tape, to find out what the price of the index was each hour, and he constructed an hourly chart. Now, out of all of that, he marked the high in 1929 as supercycle wave one. And so who am I to question the person who introduced all this to us, what their count actually was? Now, we now have pieced together, using data, additional data found from the London Stock Exchange, from when London was building and trading, and then of course, by the time the United States. So piecing all that together, we still come up with that the 1929 high was the completion point for Grand Supercycle Wave 1. And then the 1932 low was the high the low for Grand Supercycle Wave 2. Now, that's my starting point, that I have the largest degree under Elliott in play here in the Dow Jones, which I have most of the data for. And that would suggest that we have Grand Supercycle 1, 2, and then just following that as it builds. So from 1932, we have been in a Grand Supercycle Wave 3. What's going to be inside a Grand Supercycle Wave 3? Well, it's going to have 5 waves of supercycle degree. Okay, so now let's go up. So we have Supercycle Wave 1 and Supercycle Wave 2. So we're in Supercycle Wave 3 of Grand Supercycle Wave 3. So now we're building the stage for how big on how many times all this is going to subdivide. What's inside Supercycle Wave 3? 5 waves of cycle degree, of which we've done cycle 1 and 2. So we're in cycle wave 3 of Supercycle Wave 3 of Grand Supercycle Wave 3. So basically, we're in a 3 of 3 of 3 move. Now, what's going to be in just in cycle wave 3? There's going to be 5 waves of primary degree, of which we have 1, 2, 3, and 4. Now, there might be others who will argue the actual placement of these, but this is now my work, and where I'm showing primary 1, 2, 3, and 4. And primary wave 3 topped in 2000. And then we had a primary 4th wave that unfolded over the next 9 years. So we had the A wave, the B, which ended up in the Dow alone being an irregular B. And then we had that great financial collapse of 2008, 2009, bring the market down and completing primary wave 4. So from 2009, we have been in primary wave 5, of cycle wave 3, of supercycle wave 3, of grand supercycle wave 3. So really, what are we getting ready to possibly finish up here at this high that we're now looking to get to? We're looking to finish primary wave 5. Well, actually, let me take it down one more. Because now we're in primary wave 5, what's inside of that? 5 waves of intermediate degree, of which we've done 1, 2, 3, and 4, and we remain within intermediate wave 5. Intermediate wave 5 will then complete itself, and then primary wave 5, and then cycle wave 3. So what high are we tending to get to? It'll be pretty, in my view, for the Dow, it'll be a major high, because what are we going to next is a cycle degree fourth wave. Now, since we've been talking about fourth waves quite a bit lately, what does that entail? If we're finishing cycle wave 3, cycle wave 4 would be expected to find its terminus, its endpoint, within, and most likely at the endpoint of the fourth wave of one lesser degree. Well, we're coming down. Cycle, what's one lesser? Primary. So, in essence, what I'm kind of looking at here is on the basis of the Dow, when we finish this magnificent rally, which we're still involved with, by the way, then what's going to happen is it's going to be a major, major decline. What in God's name is going to create it? I don't know. None of us do. But what the wave pattern and what it's suggesting is that we have the potential to drop significantly over a period of time, which is likely going to be, I would think, 5 years or more. If we're considering that the primary fourth wave took 9 years, and now we're going to jump up to a cycle degree fourth wave, one would think it's going to be 10 to 20 years. Now, that's a long time. And a lot can happen. There will be rallies, there will be declines, there will be serious declines, there will be problems. So it's saying that, that the globe or the country or whatever is we're really kind of heading to a very difficult time coming up. And what essentially will be behind it all, well, yet to be determined. But now let's just kind of bring this in. That's a very big picture that I'm looking at, folks. So since 2009, we've been in a primary fifth wave up. So now it's 16 years old. This was March of 2009. Here we are, March of 2025, 16 years later, and we're not done yet. So now, let's bring this down. We'll take a look at the 10-year. This is a 10-year chart, 10-year weekly chart. And we can see again, there's 3, 4. There's the intermediate 3, intermediate 4. This is all within that primary. Fifth wave up, right? It's going to consist of 5 waves of intermediate degree. Here's intermediate 3. Here's intermediate wave 4. We're in intermediate wave 5 up, which will consist of 5 waves of minor degree, of which we have 1, 2, 3 complete. And we're in that minor fourth wave. Again, we're in the cash market. This is the 10-year chart. Let me bring it down to the 3-year chart. There's wave 4. Here's minor 1, minor 2, minor 3 subdivides, 1, 2, 3, 4, 5. Minor wave 3 completed at the December 2024 high for the Dow. And we're now involved and still remain within a minor fourth wave correction. And there would be the previous fourth wave of one lesser degree. We've kind of exceeded that. So it kind of brings it down a little bit that maybe we're going to come down into this area. Maybe. All is a big maybe. So if I'm looking for minor 4, the first thing I can do is put up some fibs straight retracements. 382 is 39,861. 50 brings us into this, right? 382 brings us into this. So again, do I need to move that down? Do I need to move this down? 1, 2, 3, 4, 5 for this minute fifth wave? And that very well could be. Why? Because of where we're lining up to find our support for this minor fourth wave. So, and I'm doing this because I want to show you how we need to pair things up more correctly. So if I were to move this down, put the 3 there and the 4 there, because most of the time we think it makes sense the way we do it until we start to look at what our fibs could line up. Here's the 382, here's the 50%, there's the low. So the potential for a drop is pretty heavy, and that we should get below 40,000. And actually, I've been calling for just probably likely that we may not get down, we may get down to 39,860 in that area. And that would be enough, since the most common relationship, Fibonacci relationship for a fourth wave, is a 38.2% retracement. And that brings us right to that level. All right, so now we're going to jump off of here, and now we're going to come down to the daily chart, which again, now there is the minor wave 3, and we can see we're in minor wave 4. And again, resetting our markers for minute wave 3 and minute wave 4, we can see how we actually have a lot more potential to the downside beyond 39,861. Now, inside of the C wave, because there's minute A of minor 4, minute B of minor 4, and it basically was a flat. Now, what does that tell us? We've already exceeded. So maybe we may still get down to here, but we weren't really looking for this to extend as low as it is. It still can fit, but our first call would be that we'd find it and we'd come in a flat, because this was as flat as you can get. But it's extending a little bit further and may go to the full 382. Now, inside this on our daily chart, we have minuet 1 of C, minuet 2 of C, minuet 3 of C. We remain within the process of putting in a minuet wave 4. I'm going to bring it back down again. Look at the 4-hour. Now we're just going to open this up so we can see inside this fourth wave, which, like in the rest of our markets, is basically putting in an ABCX, A, B. So it's putting in a double ABC. And that would suggest we're in that C wave now. And projections would suggest that we should still have some upside to finish. Before we finish that C wave, this gets moved over just a little bit so that it's not going to be confusing. Let's just put it over here. There's the A. Now, if it's going to be 100%, which is where wave C would be equal to wave A, that's going to come in right at 42,270. The high was 42,250, so it goes a little bit above. But pretty much we're looking for that flat. There's the A. So the A's a little bit, the B wave fell short of getting all the way down there. Oh, almost. So we're looking for it to get up maybe just shy of that high. But it's 42,268. The 382 for the minuet wave 4 comes in at 43,306. So that, I think, is a pretty good area. Now, if it exceeds it, which is a strong possibility, and that's based on just the options flows and the gamma flows and what the market kind of, how we left and what gets reset after that large March expiration that we just went through, the monthly, and sets the stage for how the market wants to go moving forward, basically because in all of our indexes and in the ETFs and all the underlying, a lot of gamma expired. And when it expires, it's like being released. And when it gets released, we get a pop in volatility up. But just because of that's what happens when the things have been suppressed, the volatility has been either suppressed to the downside, so it pops a little bit. And but then the market would be expected to pop to finish this fourth wave. And because we don't have our new levels yet, where all of these the volatility triggers, where the call walls, where the different levels coming back up, where they may have reset. Now we already know if you followed and you looked at my S&P update and the Nasdaq update, those ETFs kind of did come up, and some of them, like in the Nasdaq, it did break the volatility trigger, and it did break above the call wall in the NQ and the NDX. So in the SPX, we still have some room, but I'm looking for them to see where they're going to be realigned, what's going to happen now, because a lot of that gamma, which was holding them more compact. And so what I mean by that is that they were showing up very close to the call wall, the put wall, or the volatility trigger and the call walls were all sitting clustered together. Now that gamma is gone and it's expired, it kind of can move things back out again. So I would expect that we get a little bit more space, and the volatility trigger gets reset higher than where it was on Friday. So that could continue to give us that go grabbing higher levels, which I do think, just because of the release of all the gamma, should take us into Monday, maybe Tuesday, even Wednesday, before we start to then prepare for next Friday's expiration, before we start to prepare for any of the economic data, before anything else might have a chance to come in and start to work its negativity that may be happening in our world. Because we still have a lot of stuff that's going to come out right after that Monday, March 31st, end of quarter expiration, which now the market will deal with JP Morgan's collar, which will be shifted out to June, by the way. But what may get tested? Plus, in the SPX, we have the 5,500 level, which I believe is still going to be pretty strong support. But again, we're going to find out how these levels reset now that that gamma is gone, and it resets to what's now going to work, or what is being suggested in these markets. So that, I believe, will carry us higher and to begin the week. And I think we can get ourselves up to where maybe between the 38.2% retracement and the 50% retracement for that minuet wave 4. So we have the ability, without breaking any rules, without violating any of the resistance levels that should not be crossed, we can put in a fourth wave that could be 50% retracement of wave 3. It is not the most common. The most common is 3A2, which we still are below. So just getting up to here would fit very nicely. I think we pop above it, but we'll see. We'll see how the market reacts in here. Now, and we take a look at what our moving averages are telling us. Moving averages are like the 200, it's not declining as hard. It's starting to level out. The 50 wants to level out. The 20 has leveled out, and so has the 8. In fact, they're very close together. You can see there's the 20 at 41,923, 924, and there's the 8 at 41,892. So they're very close to one another. And if the 8 crosses above the 20, it should start to give a little bit of support for an upside move. And if the 20 curves and starts to move along with this, then it should be easier for us to get up to at least that 50. If you look with moving averages, that would be the call. You're looking for it to get up and test that 50, no matter where it sits. It could be going flat by then. Just going across the chart and then provide resistance, which is another point. Okay, maybe that's as far we get. It completes the move, and we start to retrace back down again as we get ready to unfold in a minuet wave 5. So that's the cash market, and that's the setup. Now, unfortunately, I don't have gamma levels in the Dow. I get my data from spot gamma, and they don't cover the Dow. They don't even cover the diamonds. So the best I can do is just relate it to what I see in the SPX, which again, we're waiting for those levels to be reset come Monday morning. So, and that's when I'll find out. All right, let's kind of go out and now let's update ye old futures market. I'm going to leave it here on the 4-hour chart. There's our fourth wave of 1 lesser degree. And you can see how that low is at 39,461. So we're matching up now with where the corrected level was for the Dow, for the cash market. And that's why I switched it around. This would be 3, this would be 4, and that's all 5 on a minute level. All right, so what we have, minute wave A, minute wave B, we're coming down in a C wave, and all C's are 5s. So we have 1, 2, 3. And because this is minute degree, we're looking at the minuet degree for the 5 waves. And we have 1, 2, 3. This is minuet wave 4, still in progress, and it's breaking up into a double ABC, as is the NASDAQ and the S&P. So all of our equity markets seem to be breaking into double ABCs to put in their respective little fourth waves before we get that fifth wave down to complete. In the case of the Dow, it'll be completing minor wave 4, setting the stage for a minor wave 5 launch. And if we go over to the S&P, it's going to be completing an intermediate, in a minor wave A of that intermediate wave 4. So we get a minor B wave, and that could really kind of focus a little bit and on the Dow. If we're looking for a minor fifth wave up, well, it's going to consist of 5 waves of minuet degree, or 5 waves of minute degree. So maybe minute wave 1 coincides with the B wave in the S&P and the NASDAQ. So, but you're going to see how the Russell and the Dow are very closely being related here. Both are finishing minor degree declines, which sets up for a stronger rally phase that wouldn't be starting at the same time in the SPX and the NDX. So it's going to get a little bit interesting, but I think it's all very possible. And because the different stocks and the different ones, right? Dow's being 30 stocks, so Russell's 2,000. And they're both showing some pretty good levels where I think the market could bottom. And I'll show you in the Russell what it'll be completing, but it's going to be starting a much stronger rally as well. So again, here in the futures market, there we have it. And I just want to drop this down to the hourly so we can look inside. We're looking for the fourth wave to complete. And there it sits, and we're going to move it up to here just to keep it there. It's not done yet, so that's why it's still sitting by itself. And what we have here, minuet wave 3, ABCX, A, B, and now we're putting the C wave. These were all very confusing, by the way, and so was this. Just the way these unfolded was very difficult. But what I'm allowing is for the formation of the ABC, the X, and then an A, a B, and a C for the second A, ABC for that B. So that puts all that weirdness in between there. And then there's the B wave, and now we're going up in wave C. Now, wave C would be 100% of wave A at 42,586. Now, that would put that pretty much in not necessarily a complete flat, because this high was 42,604. And here we're coming in at 42,586. Now, why? Well, we can go here to go to this low, 41,751. And we can then take that from that low, which was 41,769. So I think it's $18. Yeah, it's $18. If I had to add $18 to that 42,586, you're going to find that it comes out to be 42,604. So there we have it. And so it basically is a flat, but it's just making the difference between that low to that high to that low to this high. To be flat, it can reach 100%. 42,586, I would consider it flat. But if it goes up through that and breaks the upper channel line, well, then I'm looking for 1.618. Now again, minuet wave 4. I got to take it back out just for a moment. Minuet wave 1. It's way up here. So if wave 4 gets up to here, it's not in violation of any rules. So that fits. It fits very cleanly. And also just to see how things are going to shift out in terms of what's coming up next week with gamma being reset, levels being reset. So I think this all is very possible. And I am expecting a continuation to the upside to finish here, the minuet wave 4. And then we can begin minuet wave 5. And essentially, we have our levels here. 40,591. That keeps it above 40,000, still in the picture. And then we have the 1.618, that's on the minute level. And that's at 39,667. And then we have the 50% level on that minor degree level, and that's 39,029. So the first one, 40,551, basis the cash, basis the future. Now, don't forget, we're out into June. June's going to have plenty of premium above the cash for right now. So this is not a bad level. And it likely would then size up with this level, 42. And this level down below, that's what we're looking at, 39,861. What I need to do is just change that. No, I can't just yet. We'll leave that alone. But that's the level, 39,861. And to determine how much premium is in it, is it going to be equal? Have it come down to 40,000? Even if we, that's in the Dow. Whoops. Okay. So here, 39,861. Here, it's going to equal 40,591. So it's about 1,000. So I less than. So we then can work out that math and see if there's that much difference between the cash and the futures market to equal the lower level to this level. Otherwise, we will come down to here. That would be my feeling. But I think the Dow's pretty much on track. We'll get a lot more information once we get our new numbers, because I will continue to look at where the S&P is relative to where this could be, and also the other markets and how it all could work itself together. All right, let's go over and take a look at, the Russell. And I'm first going to start on the Russell. No, I guess I won't. I'm going to start on the Russell cash. And here again, I'm going to move this out. Let's go to my 5-year chart. I reconstructed the chart again. For those that follow me on here on YouTube, through memberships, you know that I've been really struggling with how I had constructed the chart, but albeit it remains the same in that it's an intermediate fourth wave that we're looking to finish. And So that's consisting of a minor A and a minor B. So the minor B doesn't change. And even what changes a little bit is as how this was constructed against this. And this was still in existence here. And I went back and now I reconstructed the futures chart as well. So beginning here with the cash, we're still in a minor C wave down, and that's going to be to complete intermediate wave 4. Now, I can go out, let me see how far, to here and put some markers down to where should this wave 4 come in. And well, let me just kind of put this into perspective quickly and set this up here. Let's get rid of that because I can't stand that color. And we're going to go look at, where are we? Yep, we've got 50 and 618. And I really don't think it should go much below that, even on an intermediate level. And let me just include 382 because that's the most common. And you can see that one coming down, the Russell coming down. Now let's bring it all the way back. Where were we? Let's start on the 4-hour chart. We weren't there. We were actually at the 5-year. Here we are. So you can see how 382, yep, that's 17,044, but we'd basically be looking for wave B, which pretty much is flat, to get back towards that 100% level. Right? That's going to coincide with that low. And it's be a perfect flat. Now we're trading at 2056, 2057. So that really is kind of putting us in maybe this is not yet done on this third, and we need to drop cleanly below 2000 and get down lower. And if I'm going to bring this in, let's take a look at the daily chart. We're trying to go 1, 2, 3, but it's internal. So 1, 2, 3, but I'm doing it 1, 2, 3, 4, 5 as the internal. And that this is the 4. Now that could be different because if I go over it and I take a look at what I did in the futures market, you could see that I definitely could move this again down to here instead of here and do an internal 1, 2, 3. I went in minuet 4, not a minute 4, which puts that out still to come. And that might be the ticket. I wanted to leave it because right now I'm basing a lot off of this minute degree, but it was the cash that kind of gave me that heads up like, that may not be the finishing point. That might only be the finishing point for a minuet 5th wave or minuet 3rd wave. And now we're coming into minuet wave 4, and we're going to come down to put in that low for minuet wave 5. And then we're going to go back up in a minute 4th wave, come back down. So again, don't know how much that's actually going to happen against what the rest of the markets may or may not be doing. So in the Russell, it doesn't look too bad right now. If we're just going to figure that we're going to go back up and we can run our fibs here to where we think the market can come up to. And right now we're looking at 2115 would be 382. So on a minute degree, we can put that in right now. And again, I always think I've done these things. And 382 is going to come back up to. And I'll leave it. I don't think it's going to get there. So I'm just going to leave the 382 for right now, the 2115, because we got that 4-hour 200 sitting right above it. And I think that's going to provide enough. So from where we are, closing at 2056 in the cash, and I think that could be A and this could be B, and we're going to come up in a C wave and smack it on the nose, maybe get past it a little bit. Where we cannot break 2158 because that would put this minute wave 4 overlapping. Now, if it was a minuet wave 4, it has a whole lot more room. Okay, so either way, we're going to keep a close eye to see what the degree is. And that would mean that this is 1, 2, and this is all minuet wave 3. Minuet wave 4 is going to come in a little bit higher, maybe right into here. And then we have minuet wave 5 to complete. Minuet wave 3, we go up again. That's still out there, yet to be determined. So here you can see the 200's really not very impressed with the decline so far. It's a lot slower. But what we have is the 20 and the 8 are kissing right there. They're together. They're wrapped right around each other, right around that level at 20, let me see, 2062, 2061. They're right together, right there. And if they start to go up, the 8's first going to turn, and then the 20 will turn and go with it. And it might come up and test this because I think then this will go flat, pretty much right at this level. Right, it's right at 17. 15's resistance. If it hangs out at 17, then you got a resistance point that could complete a fourth wave. That's the cash. Now, with respect to, because I do have the levels for the Russell, both the cash and the futures market. Here in the cash market, market closed at 2056. It really came down, excuse me, and really dipped below back on the 13th, so a week prior. It broke below and got just below 2,000. But on its recovery back up, it reset quite a few levels. And what kind of got broken on the way up was large gamma number 2, and that was at 2050. So, and we are into, let's see. See, these dates are off. You know, the dates are saying 317, and this was 321. But just I find kind of strange. But I noticed that before. So this was Friday, and here we are also on Thursday. So on Thursday we went above, and then we broke below that 2050 level on Friday before the opening. Yeah, or through the opening we did. So again, Russell broke and went back up and then finished the day in a pretty tight range. But as the cash market goes and the gamma levels go, 2050, broke it, took it back. What we have sitting above, as it stands right now at 2070, there is the put wall as it stands right now. But it's also large gamma number 1. Now, again, remember talking about last week that in the Russell, these were all very much congested. They were grouped together very tightly. For example, 2070, large gamma 1, 2075, large gamma 4, 2080, volatility trigger, 2100, large gamma 3. So we had a very tight and compact area that if the market managed to get through, and this is what I believe will be reset. Resistance was pretty strong above this. So I think that kind of held things back. But now a lot of that gamma has been released. It's expired. So again, I'm very curious to see what the levels are going to be coming in tomorrow. Sunday, excuse me. So let's go over and take a look at the futures market. So the futures market, we kind of bebopped all over the place. And so we're going to open this up so I can take a look on the inside. Well, the whole thing, there's the B, we're in the C wave, 1, 2, 3, maybe 4. Okay. Has resistance at 2118 to 2161. Now, let's take a look at Friday. What was the market doing? Because again, in the RTY, using those same levels, 2088 was the put wall and large gamma. And did we actually go up and challenge it? No, we did overnight. We came back down through it, and then we didn't get, let's see how close we got. 2077. So at 2088 was the put wall and large gamma 1. 2093 was large gamma 4. 2098 was the volatility trigger. Those are all likely going to be reset from Friday's expiration. So that's why we were kind of held below it all. And I think that now that it could reset, the Russell might have a little better of a day. The numbers get reset, all of that gamma is gone. It's been released. So we get a pop. We get a move in the market. We get a pop higher. And so again, I'll be very interested to see where did those get moved? Because obviously it starts on Friday. What are the next levels for upsides to attack? And I'm thinking they're going to come between 2117 and 2161 because that fits our fibs for where we're looking for this completion point for minute wave 4. Now, having said that, then we're looking for minute wave 5. And once I get those levels, I'll be able to go in and put where I think this market can come and complete. Now, C 1982, that's 0.618. What we're really looking for, though, is 100. We're looking for that. And so I'm thinking something's got to go on here that's just really going to just smash Russell. And I'm not sure what that's going to be because I don't think the other markets actually also have some pretty strong downside potential. But once again, a lot is going to depend on how all of this gets reset and how the market works itself and starts to prepare for the March 31st end of quarter expiration. That again, in and of itself, is likely going to release a lot of gamma. We know it is in the SPX because of JP Morgan's collar being shifted out to June. That takes it out of the realm of March. On the last day is when it'll get shifted. And with it expires all that gamma. And it's going to be very interesting to see how things get reset. And then again, we get to do it all over. So we're getting the relief rally off of what's expired on Friday, on the 21st, which was the monthly. And now we're getting prepared for, again, another expiration on the 28th, but the bigger one being in March the 31st. I think from there, I'm hoping we'll be finishing, in this case, in the case of the Russell, that minor C wave coming down, launching the market back up in the next leg up, because that will be completing, I believe, a fourth wave will be moving back up in a fifth wave, in an intermediate fifth wave. I always did take it out, always to this one. So again, we got to get down so we can complete that minor fourth wave and set the stage for a the intermediate fourth wave. So similar to the NASDAQ and to the S&P, it needs to get down and finish an intermediate fifth wave. And I'm not expecting I think that the chance that the NASDAQ and the S&P get down there and do it, they have an A wave, minor A wave to finish, and then a minor B and a minor C. So we might, again, as I showed you in the other one, this could actually work out to be what the cash market is suggesting. And that is that this is minuet 3. This is minuet 4. We're going to come down into minuet 5 and then go back up. Beginning of April, we'll go back up in a minute 4. We're going to come down in a minuet 5, completing that minute wave 3, go back up into minute wave 4, come back down in a minute wave 5, and then that is what could take us down into these levels to complete the larger intermediate fourth wave. It's going to be very interesting because there's going to have to be some disconnect between these indexes and what's going to go and what gets left behind to possibly be readjusted. It's going to be interesting. So stay tuned. And we went over the gamma levels. I went over the moving averages again in the Russell here in the futures market. Boy, you can see them. Now, here they are in alignment to go down. They really are. There's the 200, there's the 50, there's the 20, there's the 8. They're in alignment to go down. Even if they come up here, they're still going to be in alignment to go down. This expect will react and this expect will react, but they're going to remain below the 50. That's my take. But we're going to follow the lead. We're going to follow what the market tells us. And so I think initially, we got a bunch of stuff that the market needs to deal with that's sitting out there because right now they're focusing on the gamma. They're focusing on the cash flow, on how the options are trading. That's what's really been in control of our markets because of such a large expiration we just finished last Friday. The next one is March the 31st. All right, that's going to be it. I'm going to get this posted and we'll be on to the next update, which will be on Monday morning.